I was talking to my friend and fellow realtor Mindy Ketzenich in Madison, Wisconsin the other day. Shout out to Mindy. And she used a phrase that really resonated with me. The low interest rates we experienced over the past 2 years weren't free. What did she mean by that? Let's dive in. So many of you, like me, may be mourning the loss of those 2 to 3% interest rates and are a little bit shocked to find that they're now hovering at 7 or 8%. And while that seems like a big difference, there are some positives to it. Like Mindy said, those low interest rates weren't free. They came at the cost of buyers paying over asking price, sometimes $50,000 or even $100,000 more than asking. It often came with having to waive your right to an inspection in order to stand out from the other offers. It came with having no terms in favor of the buyer. So if you were offering over list price, which is what you had to do to get a house, you had to then guarantee that if there was an appraisal gap, you would bring the difference in cash to the closing table. This, of course, assumed that your non-cash offer would even be considered in the mix of other offers received, many of which were well over list price and all cash. If you had a home you needed to sell in order to afford the new one, forget it. There was no such thing as the offer being contingent on selling your existing home. You could make that offer, but there were just so many other offers for the seller to choose from, they didn't have to take one that had any risk associated with it whatsoever for them. And it came with a horrible shopping experience that left most buyers exhausted and burnt out after they would put in offer after offer on homes only to find out that someone else outbid them. And there was no conversation back and forth. There was no counteroffer for the buyer to consider. It was just, boom, sorry, someone else offered us more than you and you're out. So many buyers gave up and left the market. And many agents were just exhausted. They kind of have PTSD in a way, and very little desire to enjoy their careers that they used to love so much. So today the market is so much better for buyers and their agents. We're seeing better deals in terms of most likely not having to pay over asking, and in many cases being able to make an offer that's less than asking and yet very competitive based on the comps. For the longest time, the sellers could price their property at whatever they wanted and not even worry about the comps. Now we're getting back to more realistic pricing. Buyers can negotiate better terms. They can have the home inspected, they can require that it appraises for the purchase price, or if it doesn't, that then becomes a new negotiation. And y'all know how much I love to negotiate. It's just a better shopping experience. Being able to negotiate is such a beautiful thing. And the other thing is there's more inventory to choose from, so you're not having to get into a bidding war over every single house that happens to be available, whether it's your dream home or not. And so the only negative thing that we really have to deal with in this market is the interest rate. In the past 2 years, there wasn't anything we as agents could do to cool down that seller's market. But I'm excited that we can now do something about interest rates. Some things that we can do about the rates is we can ask the seller to do a 2-1 buy down. So let's say if you qualify for an 8% interest rate, the seller can put some money down for you, basically paying some of your interest in advance so that your monthly payment gets lowered. Now, you're not allowed to do this yourself. Someone else needs to do it for you per Fannie Mae and Freddie Mac rules. This will lower your payments for the first 2 years of the note. The first year, instead of paying 8%, you would pay 6%. Then the second year, instead of paying 8%, you would pay 7%. This would save you hundreds of dollars per month on your payments. You wouldn't have to face that 8% interest rate until year 3, and by then, the rates may well have gone down again. As you know, rates go up and down all the time like a roller coaster, right? So then at that point, you could refinance and you would have already earned some equity in the home. We could also look at assumable FHA, VA, or USDA loans where if the seller wants to let you assume their loan, then you also assume their interest rate. Then there are things like grants and down payment assistance programs. So don't be afraid of high interest rates. Instead, let's take that energy and go find the best deal on the best home and then the best deal from your lender. If you need help finding a really great lender, let me know. I have relationships with several great ones, and they would all be thrilled to help you. I hope this helps. And when you're ready to go house shopping in the new Tampa or Wesley Chapel, Florida market, let me know. I'd be happy to assist. If you got some value from this video, please hit the like button, leave me a comment, and hit the subscribe button for more. And while you're here, be sure to check out this next video where we talk a little bit more about mortgage payments in this new market we're all navigating together.